This is a Crypto Legends podcast.
Hello, everyone. Mirnas and Daniel, welcome. Thank you for joining us today. Let's briefly go around for some introductions, maybe starting with Mirnas.
Hi, everyone. So I am currently VP of Revenue and Treasury at Rain. Rain is a cryptocurrency brokerage exchange based in Middle East. Actually, our headquarters is in Dubai. Our primary focus is serving clients in Middle East, Gulf countries, as well as Turkey and some parts of Africa. Before Rain, I was with Bitpanda, which is a European brokerage company. And before my crypto life, I was treasurer of a large UN organization, actually International Atomic Energy Agency, based in Vienna in Austria. So that was my life before crypto, more kind of traditional finance, corporate treasury. And then less than 4 years ago, I moved into crypto. So yeah, interesting times. And yeah, also it is an interesting industry because not everywhere you can become a legend for less than 4 years.
Yeah, exactly. Yeah, that's a good one. A very relevant experience to this conversation that we're going to be having today. Thank you so much, Mirnas. Great to have you. And Daniel, over to you.
Yeah, so my company, Unbanked.com, we just recently, wound it down. Unfortunately, it's been a difficult regulatory environment in the United States, which probably a lot of people know. But I was a co-founder, co-CEO of Unbanked, and primarily what we were doing was connecting cryptocurrency, blockchain, DeFi, Web3, that whole ecosystem, and making that interoperable with banks. And we issued crypto cards in most of Europe and the UK, United States. We were going to do Latin America. We had banking rails connected to SEPA, Nacho, Wire, and making all of that work together to where kind of crypto blends in with traditional banks and the banking system. But we didn't make it. We didn't raise enough money, and c'est la vie.
C'est la vie. Well, exactly. But I mean, the experience and the let's say the cases that you must have had, I'm sure there's a lot to talk about.
Great. Yeah, we did it for 6 years plus. So I have a lot of experience in crypto, and I love crypto, and I'm definitely planning on staying crypto for the foreseeable future.
Amazing. All right. Well, let's get right into it. Just gonna quickly just set the stage or paint the picture a little bit. So we all saw, or it was 7 months ago actually already, the fallout from the collapse of Silvergate and Signature. They were crypto-friendly banking options, and like everyone in crypto knew them. I knew them, even as a consumer of crypto, just a regular trader, not a business owner in anything to do with crypto. And both had an instant settlement network as well, right? And that was running 24/7. Signet in the case of Silvergate, and Signet was signatures, and the Silvergate instant network was Silvergate's. Interestingly, while Silvergate was voluntarily liquidated, Signature was seized by the U.S. government. Hindsight is a great thing, but what were some of the more significant issues at play in terms of the practices and where was the wider market at the time? Mirnas, if you don't mind taking that one.
Yeah, but I think very relevant one, at least from the business perspective of Rain and what we have experienced. We were banking with both, and we were using them for settlement with all of our liquidity providers. So there were some kind of short-term shocks, primarily around settlement, but also we come into this situation where we don't know who has what exposure to these banks, and then there is whole kind of loss of confidence or trust among the different players. So kind of short-term effects of that, but then also more kind of medium-term, as really the new players did not really emerge to fill the gap, probably because of the experience, because it's hard as well for all the regulatory reasons that Daniel also mentioned. So what we are having right now is much higher working capital requirements than before, because we cannot settle instantly. That means also lower return on the capital, and we see a lot of players trying to get into this space from the banking side, but also from a custody side, I would say. But it's still developing, and I think also the shift is also happening a bit geographically. So we see new hubs such as Dubai probably trying to challenge the space, and lots of players as well as the banks in the Dubai or United Arab Emirates are trying to enter this space as well. So it's interesting also from the perspective, like as you mentioned, we had Silvergate that kind of failed because of all the issues they had with the BTC, Bitcoin-backed loans, and some of the venture loans. I would also mention Silicon Valley Bank. It's important because of whole USD CD pack that happened as well. That was kind of shock to everyone. But then we had Signature, and yeah, it's interesting case of Signature that the official reasons for taking over Signature were the lack of confidence or poor management, and we don't hear that many banks get taken over by FDIC because of poor management. So yeah, it's hard to think that there is an element to think that it was also convenient to do because of all crypto element and how much it meant to the whole crypto infrastructure. But yeah, it's also at the same time all of this was happening, we had Bitcoin rallying, so it's not all that bad.
Yeah, and if you think of like what was going on, I was certainly remember because it was quite recent. The assets that Silvergate had, I think, was 10 billion. At the moment they were liquidating. Obviously, their stock price just plummeted to zero right before or right after they announced that they wanted to enter voluntary liquidation. But Signature, I think, had 100 billion in assets, and maybe the different treatment was because of the amount of money that was involved. Would you agree, Daniel?
Well, I'm really struggling to understand how Silvergate lost money the way that they did, because they clearly had poor risk management. If they were really wise, to me, they would have simply just made a very simple business model, which is a fee-based model. They started getting into lending and all this. I know the banks, that's what they do, they lend. But if they were just, all the market needs is kind of like what Caitlin Long wants to do, which is really just a very, simple business model, and they won't approve. Do you know Caitlin Long from Custodia Bank? She's trying to do a bank out of Wyoming. Yeah, everyone's heard of her. And, all you need is something where it's like the old school savings and loan, but not without the loan part. You just, you're custodying funds. It's a regulated environment, and if it's a fee-based model. And if Signature had just done a fee-based model, they would be standing here today. And the fact that they lost money blows my mind. With Signature, I don't know how many people know this, but so Barney Frank was a former congressman, very liberal guy, like in the Elizabeth Warren camp of liberalism, okay? And he was so, focused on the banking sector that when Obama was president in 2010, they passed what they called the Dodd-Frank bill. And the Dodd-Frank bill, with his name, Barney Frank, he was in the House of Representatives he was like the head of the Financial Services Committee. Fast forward, banks hated that, and he ended up becoming a board member on the Signature Bank. And Barney Frank said they wanted to send a message that we don't want any banks dealing with crypto. And the problem is in the United States, the states, we talked about the FDIC, but the states are the ones that have this. There's a state-based regulator. So Silvergate deserved it. They just completely managed it poorly. Silicon Valley had nothing to do with crypto, although Gensler tried to blame it on crypto, which was embarrassing and shows how dishonest he is. It's so dishonest. So, Silicon Valley had a problem in the California regulator, and then Signature was a New York State-based bank. What you haven't heard of are Wyoming-based banks and Texas-based banks and others that are friendly to crypto but have real legitimate regulation. They're regulating the hell out of it, but they're making sure that they're not just simply saying just because you're in crypto, you're out. And I think what you'll see is probably, Mirnas was mentioning this, no one's really stepped in to fill the void. And a lot of banks want to step into the void, but I worked with a lot of banks and they told me point blank, it's one of two things. Either A, they were told you can't do crypto, period. You're not allowed. It's not allowed. And if you do, there's gonna be pain. The second type of bank situation is, we don't want you to do crypto. And if you do, we're going to make your life hell, and we're going to audit you with, 60 different questions on this audit, only on crypto, very paperwork intensive, and you're just going to hate life. And a lot of banks that were like Metropolitan Commercial out of New York, Evolve Bank out of Tennessee, they were just basically walking away. So you have a few banks that will, they'll play on the fringes, and they'll play with a particular Pathward Banks worked with Coinbase. It's Coinbase. MVB works with Kraken. They're Kraken. So you're going to see less and less availability, and you're not going to have the concentration where you have a crypto-friendly bank per se. You might have a bank that's willing to do crypto as one program, but it's not part of their core until the regulatory stuff sorts itself out.
Yeah. So in this world where we're still the USD is still the lingua franca of crypto, right? When it comes to fiat. I mean, without USD, if you have a crypto exchange or on-ramp, off-ramp, or a wallet even, good luck trying to manage a treasury. I'm sure, Mirnas can relate to that. But what is the alternative right now? And also considering that both of those banks or any of the crypto-friendly banks that are handling USD had some kind of instant settlement network, right? The network, just for our audience to understand, the network that allowed, buyers and sellers that were both clients of the bank to send money in between themselves instantly, right? Either buying a service from the seller or selling the service from to the buyer, right? And the liquidity was moving instantly at really low cost because it was internal ledger movements for those banks, right? So what are crypto platforms using right now that those two major players are just gone? What is out there?
I don't think you need the settlement network. I think it's a nice to have, because all you're talking about is digital versus analog. And so what I would say is, if you're in a world where Coinbase or Circle's clearly still working with lots of banks, right? They're not, they're in the business, but it's different. Point is, they're having to move money around at large amounts. They're just aggregating their money. They're making sure that their treasuries are where they need to be. They have a certain amount of money in digital. They have a certain amount of money in fiat. They have it in this settlement account, and on Sunday it's closed. And so they're just having to plan better to move your money from, I'm going to wire my money from here. I will say, when Mirnas mentioned Dubai, anyone who's been to UAE, you can pay in US dollars. They have, billboards in English. And I think that there's plenty of banks, if you look at banks around the world, whether it be in Hong Kong or UAE or Panama or many different, there's many different countries. It's the reserve back, it's the dollar is the world's reserve currency. So, and it's hegemonic in crypto. I think you'll probably see a lot more banking in dollars outside of the United States, because the U.S. Government has made it really, really difficult to operate right now.
That's a very good point, because I am myself seeing tier one banks, not even the tail end, but the tier one banks outside of the US engaging in provision of US dollar services, sometimes even to American companies through their branches in America, because they know that, I guess, we can discuss that as well, right? Why are they doing this? Because they think that the U.S. government is not going to come after them because their main regulator or their main capital base is in Germany, for example, right? Mirnas, what do you think?
I would slightly just give another angle for Daniel. I think from the perspective of us working outside of US. So for us, the instant settlement network is probably of more value compared to the US native companies, where you can use anyway the transfers between the $2 accounts in the US. When you send a wire, it's still within the same day, but for us sending internationally, it's 1 or 2 business days probably for the funds to reach. So it becomes very difficult to operate, or at least it becomes very expensive. And because of the way OFAC or the US government interprets its function, all the banks in the world are scared to send US dollars because they are scared of the possible ramifications or complications they might have by OFAC being involved and so on. So I think this is really the critical component that makes life difficult for everyone outside of the US, because the banks outside of the US consider it high risk, or at least much higher risk, to send these other currencies versus the US dollars. So I think definitely, as you mentioned, also the stable coins, I think they will play a large role, and if properly regulated, and if we see consistency there and incidents don't happen, it's a beautiful thing to send instantly funds. And if we have this confidence that the value will not change, or at least not change to down, then they will play a major role. But again, you have stable coin. Again, they have to hold dollars with banks, and if they get access only to tier 2 to tier 3 banks, we are again possibly facing a similar issue like we had with Silicon Valley Bank or any new bank that might experience problems. So if they don't get access to the tier 1 banking, then the issues will continue.
Yeah, I think just on that point, like I was talking to Circle, actually, Daniel, you sort of invoked them here. The treasurers at Circle, a couple of months ago, after the Silvergate and Signature collapse, and they were saying they're having, they're looking for a solution that allows them to move dollars in and out of Europe, right? Because they're now issuing the euro coin. They need to move liquidity to Europe or to other countries, potentially, having other plans for other stable coins. And lack of a instant settlement network is a big problem. Instant settlement network that can move instantly $1 billion, right? Because I think, or like, I don't know, $100 million, right? Because I think the small amount transactions, there's always the instant bank payment rails exception. It can go into SEPA instant, like if it's up to 1 million euros. It can go into faster payments in the UK if it's up to 1 million pounds. I don't know if ACH has any limits. I don't think so. There's FedNow, and I think FedNow has a limit. And just don't remember what it was. So, what is the, like? Do you see outside of the US maybe the need for someone to kind of pick up the mantle of Silvergate or Signature and build that sort of instant settlement network? Do you see any attempts even to do that?
I see firsthand in Dubai, because we have local banking partnerships. Some of the Dubai-based banks are working or trying to enter into this space. One of the advantages that they have is that the local currency in the region is pegged to the US dollar. Most of the Gulf currencies are pegged to the US dollar, so they are natively,
because of the oil trade, right?
Yeah, so they are all natively connected to dollar, and with some solutions, and also as more players are coming to Dubai as a new hotspot, they are seeing opportunity here and are working on some solutions. And I think similar things are happening in Hong Kong as well, speaking with many partners or some of the banks. And I think certain things are being done there. Look, we still continue also like working primarily with the US banks for settlement, but it's more kind of scattered around. As Daniel said, it's like they don't doesn't seem realistic that we'll have one bank kind of controlling all the volume, at least not in the US, following what happened.
Yeah. So and taking a step back and going back to Daniel and some of the points that he made around regulation, how in this environment, how do you even begin to develop any kind of resilience? Like if you're a crypto platform just starting up, or maybe you're already established in the market, you need access to dollar. What are your options? We talked about the foreign banks, but that might not always be an option because at some point someone's going to throw obstacles, at the payments that if they abuse the trust that the U.S. government has given them on U.S. soil, right? But how realistically can you plan, redundancies around this and resilience if you're a crypto platform?
Well, I'll say this, and this is the opportunity. And I'll step back because it kind of ties to the original question that you just asked Mirnas, the last question. But I'd say if you look at it, this is all informed by politics, unfortunately. And if you step back on a bigger geopolitical point of view, you have the BRICS, right, competing to create this sort of comparable dollar, or something to threaten the dollar or to compete with the dollar. The problem is, no one in China's been obviously investing into Africa and building relationships in Middle East, try to kind of pull them back in because they are very energy dependent, and all of that matters because the dollar has been a reserve currency because of the petrodollar, and it's very tied into Saudi Arabia and the OPEC. Well, if you look at what Biden is doing right now with Israel and Saudi Arabia, it's very relevant because they're working on a big deal. Israel and Saudi Arabia is huge because when you get Saudi, you get Egypt because they're the number one funder. You're getting UAE and every other Sunni nation, right, basically, and you're bringing them all under the fold. And the deal is, we'll provide security. We'll resolve the Israel relationship with the Saudis formally because they've been wanting that forever. And we're going to give you security guarantees, blah, 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 in return for keeping all purchases of oil in the US dollar. Very highly relevant, super, super highly relevant. Okay. To the question around, who's going to solve this problem? Citibank is now Citibank's huge. They're huge. We talk about an American bank. Yeah, they're an American bank, just like JP Morgan Chase American bank, but they're also banks all over the world. Okay. And now Citibank is doing the deposit token. It's a stable coin, but they want to give it they want to clean it up a little bit. They don't want any association to crypto, so they're going to call it something else. They're going to call it a deposit token, and they're going to solve for this problem of this sort of a remittance cross-border type situation. I think Ripple's been trying to solve this problem with building the network. The problem will be solved. It will be somebody's going to be greedy, and I don't mean greedy in a negative way. They're going to come in and say, look, there's a big opportunity. There's a lot of industry to solve, and whether they're in UAE, whether they're in Europe, wherever they're going to be, they're going to solve that problem some way, shape, or form. It's going to be a technology solution. It's going to be very painful, the same way that the cannabis industry has experienced tremendous pain. And they can't keep, crypto is not, it should not be, and I'm a super liberal guy. I don't want my military to be the right wing or the left wing, and I don't want my police to be that, or my firemen, like, oh, my firemen's a Republican. Like, I don't care, put the fire out. And I don't want crypto to be a partisan issue. So I want to have Democrats and Republicans in the United States because we're very polarized. I want them supporting crypto, and that's going to be the challenge because if it's not in the United States, nobody trusts China. Europe is great, but it's still this, Eurozone more than it is, you have all these different languages, and I don't need to tell Mirnas about that, right? So it's like all these different cultures and everything blending into Europe and making that the European Union. The dollar could be supreme for a long time if we could just get our stuff together, because I don't think BRICS is going to do it because India just pulled out on the currency side because China is not popular among the Indians. Very unpopular. So it's ours to lose, but some way, shape, or form, it's going to get solved, or they're going to just they're going to go to Europe and maybe just transact through the euro possibly if we don't figure it out.
So would you give more chances that someone like a new startup or like a purpose-built crypto bank in the US is going to come up and pick up the mantle, from the ashes of Silvergate? Or is it going to be one of the big banks like Citibank that you mentioned or JP Morgan?
I think it's JP Morgan already built it. JP Morgan already has. JP Morgan for years has already had very quietly a cryptocurrency, a digital dollar, and they don't call it crypto, they call it whatever they call it, but it's the same freaking thing, and they have a settlement network. And by the way, what bank do you know in the world doesn't want to be part of the JP Morgan, Chase settlement network? They're huge.
My bet would be more like, yes, on one of the tier one banks stepping into this space, but I think they will do it more from a custody angle. So I know for a fact some of the tier one banks are starting to look into the custody space. And they will start slowly, probably with several assets and institutional support and so on. So whether they will do it directly or through some of the existing custodians who already implemented this kind of settlement for crypto assets among various players. So I think next natural step might be that some of the existing custodians or banks that will enter the custody space, they will introduce fiat to fiat or fiat to crypto settlement as well.
Yep. Well, let's hope that actually happens. Just kind of changing gears a little bit, like Mirnas, you were talking about how the UAE or Dubai is becoming a bit of a hub, including for like US dollar banking. Can you maybe talk us through a little bit about your or Rain's banking setup and like how you're navigating those issues currently as they stand? Because there's probably some lessons that we can learn from that.
Yeah, like establishing new banking relationship is a constant job of anyone working in treasury or finance for a crypto company. Because of all of these reasons, we cannot rely really on any bank that we know for sure they will never say we are de-risking or we are or the regulators ask them to change the gear or anything like that. So Rain has really good mix of local relationships in the UAE as well as Bahrain, as well as Turkey. We have 3 entities that are locally regulated in these 3 different countries. Bahrain regulated by the Central Bank of Bahrain. We have access to banking, no issues there. And then we have Rain Abu Dhabi Global Market entity, also regulated entity with the local banking rails in United Arab Emirates dirhams, as well as the US dollar for international settlement. Turkey, also local banking, but we serve a wider region of Gulf. So for example, Saudi Arabia, completely different picture because the regulation is not yet out there. It's extremely difficult to accept funds from users from Saudi Arabia, Kuwait, or Oman, or any of these countries where we still don't have regulation. So Rain is a bit like always took the stance to get regulated first, get the local banks, but it's not possible in those countries where we don't have regulation yet. And we try to serve also parts of Africa, primarily north of Africa, primarily through cards or some other alternative solutions, but it's not easy because of the lack of regulation or stance of these countries towards crypto.
Yeah, I can imagine it's not ubiquitous. There we go. That's right. So every single country has a different, like even in Europe, it's like that. Like if you don't look at the Eurozone, you look at the Eastern European members of the European Union. I'm from one of them. I'm Polish, by the way. And they all have their own currency. They have central banks managing their own currency, not the euro, right? So it is all a little bit of a mini war game in each of one of those countries. You want to get in there, get those consumers. You don't have local banking partnerships. You can't play, right? And then it's all about like, is Poland, is Czech Republic, is Romania, where are they on crypto regulation? Because we want to go there, we want to launch there, but we want to be servicing local customers in the way they're expecting to be serviced, right? So it's quite familiar situation. But are they actually? So what do you do if you, like, for example, you can't service in a local Bahraini currency, right? There must be I don't know, a wealthy Bahraini individual wanting to trade on your platform. What do? Do they then go into USD, right?
We have in Bahrain, for example, where we have local bank accounts.
For example, I'm not singling them out, but just giving an example.
Yep. We have accounts in all these different currencies. So we have Saudi Riyal, we have Bahraini dinar. So all of these Gulf currencies, users can deposit, they need to send to us, but it has to be SWIFT international wire. So what happens in a lot of cases, that the originating bank will block the transfer because it's going to a company that they identify to be related to crypto, whereas there is no local regulation. So our bank that we have client money accounts, let's say in Bahrain or in the UAE, is fine accepting the funds, but the originating bank from these banks from these countries, these are the issues. And on the other front, we have like international banks in US, in Switzerland, in some other countries, but these banks only provide us services for treasury or FX or settlement, corporate treasury. They will not give us the client money accounts. Like everyone has this kind of issue.
Yeah. Okay. Well, it's definitely, I don't think there's a clear solution. There's a lot of uncertainty on those markets, and it's probably going to continue like until the political sort of landscape changes. I just wanted to go into something that happened recently. PayPal announced its US dollar coin, or PayPal USD. Daniel, you must have like talked and heard like a lot about it, till this point. You were talking about JP Morgan, but like when I think of tier one banks, I'm always thinking they're in it for the control, right? Because control means they can keep the customers, they can keep the flows in-house, they can make money on lending, they can make money on deposits, and they're happy, right? And they're growing fatter and fatter by the day, right? Is there could PayPal be an alternative here, right? Because PayPal, okay, there is also a control play here, but it's a much closer brand to the average consumer. If I'm just a consumer, just removing myself from an entrepreneur's sort of badge or business owner badge, and I'm thinking PayPal and JP Morgan, I'm probably going to trust PayPal more than JP Morgan at a consumer level. Could PayPal become an alternative for helping moving US dollars around?
So yeah, the answer is yes. It's a trusted brand. They're going to do it right. They have a army of lawyers that they need to do in order to manage this thing. What they're really doing is they're white labeling Paxos stablecoin. That's all they're really doing, and Paxos has been great too. PayPal right now is very expensive, super expensive, but that's not uncommon. Just like what MetaMask just rolled out with their fee structure to connect directly to an off ramp is very expensive. But inevitably, the market will there will be competition in the marketplace, and then those prices will become commoditized, and that it's inevitable to me. So PayPal getting into it is a welcome sign. They're a brand people trust, and whether or not, look, I think people would just prefer that their banks do it. But you mentioned something which is really important. It really comes down to control. The control issue is at a government level, and the control issue is at a company level. Banks are so freaked out because of the outflows right now. They're going out of banks right now because the Fed's stepping in. I'm just telling you from an American perspective, right? Fed stepping in, we got high inflation. So what's the Fed doing? It's like raising rates. So now it's incentivizing depositors to buy treasury bonds, or people who have money to buy savers. So they're buying treasury bonds. Well, they're taking their money out of the banks because the banks are giving you 0.1% interest. They're giving you zero. Unless you're a JP Morgan Chase client and you have $5 million, in which case they're happy to give you 5%, right? But if you're not $5 million, which most people aren't, then you get zero. You get nothing. And so that there's an outflow of money from the banks, and the banks are freaking out because of liquidity issues. And there's likely some more SVBs down the road. There's already rumors of a major commercial real estate collapse waiting to happen, which no one's taken mark to market on. BlackRock hasn't, Vanguard hasn't, and banks are sitting on all that debt, and they don't want those buildings. So you have all these issues that are sort of post-COVID. It's going to have real-world impact. The banks are basically going to flush out. The Fed's breaking the system, and they're going to stop when the system breaks. And that's a long answer to get you to the PayPal thing, but to me, it is the inevitability that people are going to move that direction, and I just wish we had more digital-friendly solutions like payroll, where you're skipping the traditional fiat rails and you're just getting paid in digital money. Because as soon as you start to feed it that way, you're changing the game completely, and you're changing the way that banks operate, and you'll just need the banks will exist, but they'll just need fewer of them.
Yeah, and I think the element of regulation comes into that, right? Because the consumer, what you just said, I would love to be paid in crypto, right? I would love to, but because I have such a high risk appetite, right? As an entrepreneur, my mom.
Well, it could just be digital dollars, though. Digital dollars.
Digital dollar, exactly, right? But then it's where regulation comes in, and regulation teaches the consumer what is safe, right? Or because this has been rubber stamped, this has been approved, and in the absence of regulation, there's just fear, uncertainty, and doubt, right? And you don't want to engage with those new solutions. You don't want to go into the unknown if you know that you're potentially putting all of your money at risk. That Silvergate or Signature or whomever is trying to do this is going to implode.
But I really want to answer that. Okay, I want to answer that because there's already 50 million Americans using Coinbase, according to them. Okay, that's a lot of percentage of population just from Coinbase, and they are not the entire marketplace. B, I would say that people's trust in banks in 2020 or 2018, remember, you already had the fallout from 2008. Okay, we step in, we solve the problem. People have come to realize your money that's in the bank that's safe is not actually safe. If you're running a business with more than $250,000, which is not a lot of money. I used to think when I was 17 years old, oh, that's a lot of money. That is not a lot of money. And if all the Federal Reserve is ever doing is protecting, Treasury is protecting is $250,000, and you run a business, even a small to medium-sized business, you're screwed. So it changed the perception of how people view banks. So you don't think of banks now as safe unless they're one of the top four, right? The Bank of America, Wells Fargo, those types. And then you've got to remember there's just really been a degradation and attrition of trust in the political system and establishment. And when the establishment tells you that you shouldn't do this, there is no trust right now in the establishment. And that goes back to that political divide we have. There's been a breaking down. We literally have people now talking about defunding the FBI now. Okay. So I would say that the trust level, for all those reasons, that it's kind of, the banking system has earned its reputation. People don't trust banks. But, what's better out there? I think there's nothing better when people finally get right with God and they finally are educated on the fact that I can trust nobody better than myself. Now, that may not be good for grandma, because maybe grandma is susceptible to scams and, how do I use this, that kind of thing. But for a lot of people, especially the younger generation, my kids are 12 and 7, and they are definitely going to be crypto-centric. I guarantee you, digital money, even if it's just stable money compared to, I got to go to the bank and, what do you mean you're not available on Sundays? What do you mean it's like after 4 o'clock and I can't send money? What do you mean you're going to limit how much money I can send? What do you mean that, you're going to charge me $35 or $45 for this transaction? Like, when you get into all of it, you're going to say, why am I using a bank to do what I can do myself in my own wallet? When you break it down, it actually doesn't make any damn sense.
Yeah. No, that's right. I think the only thing I would say to that is maybe there's a bit of there's quite a few differences between Europe and the US. But in Europe in particular, you have this new regulation coming in, MiCA, right? And just pulling a completely detailed analysis of like what is it doing. In short, it is putting an equation mark between electronic money and stablecoin. Like at the sort of typical consumer or business level, stablecoin will in the European Union will equal e-money. And e-money has been established in law for 15 years in the European Union, right? Where it actually is equivalent to the cash that you're paying out from the ATM. So in that sense, I think the regulation in Europe is actually helping the adoption of digital money, and potentially some solutions like you mentioned. I wouldn't be surprised if payroll companies, once MiCA is in, once the euro stablecoin, whomever it's issued by, right, Circle or whichever is going to become the dominant, maybe the European Union will issue its own, right, is going to be equivalent to e-money. That's the moment when you're going to be able to pay the bills and pay for utilities in euro, in digital euro, and that is that's the tipping point. Like many people like are following the law of diffusion of innovation, right? They're saying we're at innovator stage and we need to cross the chasm into early adopters. I don't think we're at early adopters in crypto, unfortunately, still, because this is like less than 2% of the world's population, maybe, is using crypto for something. But I think that is likely stuff like this, if you can replicate it in the US and like when the politics are right, because it's highly complex. I don't want to put Russia into that and like what is going on in Ukraine. There's all sorts of macro stuff that is impacting the situation and probably what the US government is doing. But when the politics are right, the US has to follow suit, right? It has to change.
It's inevitable, because otherwise, what are we going to do? We're going to ban crypto 20 times like China? How'd that work out? It's inevitable that we're going to have to, because no matter what you do, it's going to happen. That's it.
And I think the regulation is the key for crypto industry. And I think regulate or the governments, by not having the clear regulation, are exactly doing that because they are aware once the regulation is out, once the rules are defined, then there is a kind of danger to the whole monetary system as it is constructed today. And I also believe that more kind of longer term, that banks will definitely be there, but I see them more as kind of what telecom companies have transformed into over the last 10 to 15 years. So today, what used to be like largest telecom companies today are the internet providers. So they provide this kind of infrastructure, and everything that happens on the digitally, and I believe that the cryptocurrencies will play a major role in terms of remittances, in terms of some of the things that are currently or historically done by banks. But regulation is definitely a key, and because regulation gives us the access. If I'm regulated by the central bank and the bank is regulated by the central bank, what's the reason for that bank not to give the access to the client money accounts and to enable people to invest, fund, or buy cryptocurrencies for whatever reasons they might have?
Can I add one thing? I know we're going to be ending it up, but there's an important historical corollary here. You mentioned PayPal. The only reason that PayPal is because at the advent of the really adoption of the internet, when banks and Visa, MasterCard stepped away from their traditional role as payments facilitators because they were scared of the risks associated with the internet, somebody filled the void. So PayPal steps in, they partner with eBay, basically get acquired by eBay, and they solve the problem. And PayPal to this day is still PayPal. They're like this massive juggernaut in the space, right? Okay. I view Tether and Circle to be similar, and that eventually it's a matter of time. The big banks are going to fill fill that void the way that their natural role. They're going to step in. It's going to happen eventually, and you're still going to have the aftermath of Circle and Tether, basically, who are going to have billions and billions and billions and billions of dollars. And they were going to have benefited from the fact that all these big banks basically abdicated their responsibilities over the past 8+ years, whatever.
So just to kind of finish with, because like we don't have a lot of time, but I wanted to finish on this point. Like, what about the interim, right? So we talked about MiCA, but MiCA is, I think we're lucky if towards the end of next year, MiCA is implemented in the majority of European Union states, and properly rolled out, right? What do businesses do in the meantime? So one of the options, like we talked about PayPal, card rails, is that like a viable alternative to move money around at present?
I don't like cards. It's definitely an alternative, but I don't like I don't like them so much because it's expensive for the end of user, because of everyone involved, like card schemes, the issuing banks, and the whole aspect of. But also it ends up with banks at the end. It ends up with the issuing banks and their willingness to accept or not crypto merchant codes and so on. So we are again coming to the same end unless they do some funky stuff. Banks still control the whole business, and the whole card business is just increasing the overall cost of transactions. But of course, in the interim, if it gives the access, if it solves the problem, especially on off-ramping, or people can now spend directly from a crypto card, that may gives also some of the crypto companies this unique kind of bank or financial institution position, where if you can spend directly from your crypto wallet or from your fiat wallet, there is no need to have like bank. You can use a crypto company as kind of a bank. So there are also opportunities, but overall, not a big fan of the card solution until the fees dramatically don't go down and more clear rules also in how the banks will deal with the acceptance of crypto cards, of crypto payments.
Yeah. Daniel, what do you think?
So, by the way, Mirnas, I know a great company that actually will move money on card rails into bank accounts in 163 countries, just so you know, so we can talk about that. But that are starting from crypto. But I think it's maximum pain in the interim because, like you said, MiCA's going to take a little bit of time. And because, Unbanked, we issued cards in Europe and UK and US, and we had bank accounts, blah, blah, blah. US, until there's regulatory certainty created by Congress, then the SEC is stepping in and basically trying to take all of the power it can. And the courts are saying no. The courts, they've lost in the courts. I don't know. It's embarrassing. So I think we're going to deal with maximum pain until it is a political issue, unfortunately, that has to be resolved. Congress, like Europe, stepped in, and what Europe used as its reason was, we don't want Russian money laundering happening in Europe, and we need to get some consistency. We need to solve this problem. We need transparency in the marketplace. We're going to treat all money as it should be. You have several people Kristen Gillibrand is a liberal in New York, okay? Cynthia Loomis is a conservative out of Wyoming. They could not be as far apart in terms of the constituencies which they serve. Wyoming is very, leave us alone ranchers, and then New York is the capital of banking. They're sort of seeing a lot of constituencies, and they're trying to promote a bill in the Senate. So it'll get resolved, but until then, it's just really trying to find what company can we use.
Yeah, you say that. I heard Cynthia Loomis at Bitcoin 2022 talking about that bill. What has happened since? Like, is there actually going to be so because that 2 years that we're in right now, let's say this cycle that we're in right now, crypto winter, and what is going to happen next year? We're all looking forward to the next year, but what is happening right now is companies are dying because they don't have access to banking.
But there's a lot of other things that happened. Celsius, FTX, Voyager, BlockFi, Terra Luna. We look like a bunch of, and a Signature. I mean, not a Signature. I could say you could take, but Silvergate. Silvergate should have not gone out of business, but they didn't properly risk manage. So, some of it is a little bit of on us. Okay, there's a lot of self-inflicted casino. We're like, what do you mean? We're like smoking, like it's not good. What happened? There was a casino element, but by the way, it was driven by the Fed too. So I think that all that happened was you had people like Maxine Waters, who's in the House, who used to run the Financial Services Committee, liberal out of Compton, right out of LA, and she was on board. But the problem is when you have a guy like Sam Bankman-Fried go in there and say, you know what? There's some bad guys, but there's the good ones like me. We're going to do it right. And then that guy is the worst guy. So then and I know a lot of people specifically on the Democratic side in the political realm, and they think that this whole thing is just a Ponzi scheme. They think it's all a Ponzi scheme. It's all, so there has to be trust. And by the way, there's a lot of bigger fish to fry right now between the Ukrainian situation. We can't even get Congress to pass a freaking budget. We have our own internal problems. So crypto on the list of prioritization is like, it's not even in the realm of top line. If you ask the average, and not to mention we're about to run into a presidential cycle, which is going to take all of the air out of the room. So probably 2025 at this point.
All right. Okay. Well, it is a prediction. I would need for the ecosystem to have something else like in the interim, and I think that even the next 12 months are going to be absolutely crucial for the industry, and to think that we still don't have a clear answer. Obviously there are options you can pursue. You can bank with foreign banks, like we said. You can go to PayPal, try and buy some PayPal stablecoin. You can go to Circle, to Tether, have them help you kind of move money around. But there's no like clear winner in this situation. Everyone loses in the next year, right? Or in the next 2 years. So what we are hoping for at Fiat Republic is that something in America will eventually emerge, be it a new startup picking up the mantle, rising from the ashes, the phoenix, maybe in Wyoming, who knows, or a big bank that and a big bank and a CEO of that bank will stop saying that Bitcoin is a Ponzi scheme as well. That's what I hope.
Which is probably false. But go ahead.
Because he keeps saying that every 2 years, and I'm sure he changes his mind. So I don't know what would take to change his mind again. I'm sure you know who I'm talking about. But yeah, well, maybe that's the trust the daughter, and then crypto companies get the US dollar access that they craved. Okay, guys, thank you so much. We've spent quite a lot of time, quality conversation. I loved it. Thank you so much, Mirnas and Daniel. You're both crypto legends now, so you earned the badge. Boom, boom. It was a pleasure having you on the show. And to our audience, if you want to stay updated for more legend details, smash the subscribe button, leave a comment for what you'd like to see. Stay tuned as we bring you those most inspiring stories from crypto legends of Web3, and we will be back. Thank you so much.